You'll find out. 3 words. That is all the President of the United States had to say when asked how far he was willing to go. 3 words that just wiped $2 trillion off the global equity markets in a single trading session. If you checked your brokerage account yesterday, you probably felt that pit in your stomach. That wasn't a correction. That wasn't a healthy pullback. That was the sound of Wall Street realizing that the geopolitical game has changed, and the rules we've played by for 70 years might just be going up in smoke. It is January 21st, 2026. And if you thought 2025 was a roller coaster, buckle up. We are witnessing the single worst day for the markets since the Liberation Day turmoil last April. But unlike last time, the path to recovery isn't clear. We aren't just talking about tariffs anymore. We are talking about the potential annexation of sovereign territory by the United States, a fracturing of NATO, and a Canadian Prime Minister leading a rebellion against Washington at Davos. What happens to your portfolio when the world's reserve currency issuer decides to go rogue? What happens to your 401k when the art of the deal turns into a game of Risk with nuclear powers? Today, we are peeling back the layers of the Greenland Crisis. We're going to look at why Wall Street is bleeding out, why this specific piece of ice is worth risking World War III, and most importantly, how you need to position your money before the next shoe drops. Let's get one thing straight immediately. This isn't about buying a golf course. The mainstream media is treating Trump's obsession with Greenland like it's a vanity project. It is not. It is the single most aggressive economic power play of the 21st century. Why? 2 reasons: rare earths and the Arctic route. Greenland sits on one of the largest undeveloped deposits of rare earth elements on the planet. Neodymium, praseodymium, dysprosium, the stuff that makes your iPhone work, your Tesla run, and more importantly, the guidance systems on American Tomahawk missiles function. For the last 2 decades, China has had a stranglehold on this market. President Trump's logic is brutal but simple: if we own Greenland, we break China's monopoly. We secure the supply chain for the next century of American tech and defense dominance. But here is where the business logic crashes into geopolitical reality. You don't just take a territory from a NATO ally because it has good rocks. Yesterday, the illusion that this was just negotiating leverage shattered. When Treasury Secretary Scott Bessent warned European nations against ramping up their military presence on Greenland, and the Prime Minister of Greenland warned of an imminent invasion, the market priced in something it hasn't priced in since 1939, annexation risk within the West. Wall Street hates uncertainty, but it hates war between trading partners even more. The S&P 500 didn't just stumble, it faceplanted. We're seeing a rotation out of everything. Tech? Slaughtered. Consumer discretionary? Dead. The only thing green on the screen is Raytheon, Lockheed Martin, and gold. To understand the panic, we have to look back at Liberation Day in April 2025. Remember that? The administration threatened 100% tariffs on all semiconductor imports to force domestic production. The market tanked, the bond vigilantes revolted, yields spiked, and the administration blinked. They walked it back. Calm ensued. Bob Michel over at JP Morgan Asset Management, a guy who manages more money than the GDP of most countries, is hoping for a repeat. He told Bloomberg yesterday that this market tumble is a message to the White House. He's essentially saying, hey, you broke the toy, now fix it. The belief on Wall Street is that this is just another shakedown. The theory goes, Trump threatens to take the island, the markets crash, Denmark offers exclusive mining rights to the US to save face, Trump declares victory, and the S&P hits a new all-time high. But here is the danger of that thinking: diminishing returns. You can only cry wolf so many times before the villagers start packing their bags and leaving town. The market is realizing that Trump might not be bluffing this time. And if he is bluffing, the damage to the diplomatic plumbing of the global economy might be permanent. The VIX is screaming that investors are no longer hedging for a correction. They are hedging for a regime change in global finance. While Wall Street was melting down, something even more dangerous was happening in Switzerland. Mark Carney. You know him. Former head of the Bank of England, current Prime Minister of Canada. A central banker turned politician. He didn't mince words at Davos. He stood up and declared that the rules-based international order is effectively dead. This is a Canadian Prime Minister openly rallying the world against the United States. He's calling for a coalition of middle powers, Canada, the UK, the EU, Australia, to band together to resist coercion. Why does this matter to your wallet in Ohio or Manchester? Because these middle powers are the ones buying American debt. The US runs on debt. We run a massive deficit. To keep the lights on and the government running, we need the world to buy US Treasury bonds. If Canada, the UK, and Europe decide that the US is no longer a reliable partner, or worse, a hostile actor, and they stop buying our debt, interest rates in the US explode. If the 10-year Treasury yield goes from 4.5% to 6% or 7% because of a buyer's strike led by Mark Carney, mortgage rates in the US will hit 10% or 12%. The housing market freezes. Corporate borrowing costs soar. Zombies companies go bankrupt. Unemployment spikes. Trump is betting that they have nowhere else to go. He said yesterday he's confident the EU will continue to invest in the US. He thinks the US is the only game in town. But is it? Capital is fluid. It can flow to gold. It can flow to Bitcoin. It can flow to emerging markets. It can just sit in cash. The arrogance of assuming the world must fund American expansionism is the exact catalyst that causes empires to stumble. Let's dig into the mechanics of the threat. Trump is threatening new tariffs on the EU if they interfere with his Greenland acquisition. Let's play this out. Step 1. The US slaps a 25% tariff on European cars, wine, and luxury goods to pressure Brussels. Step 2. The EU retaliates. They target the political pressure points. They slap tariffs on Kentucky bourbon, Harley-Davidsons, and American corn. Step 3. Inflation returns. We just spent 3 years fighting the post-COVID inflation monster. We finally got it back in the box. A trade war with Europe, our biggest economic partner, rips that box open. If you are holding consumer stocks, companies like Nike, Procter & Gamble, or Ford, you are in the blast radius. These companies rely on global supply chains and European consumers. Furthermore, consider the Greenland Premier warning of invasion. If the US Navy creates a blockade around Greenland, what happens to North Atlantic shipping? Maersk, the Danish shipping giant, controls a massive chunk of global freight. If they stop shipping to the US, or if insurance rates for crossing the Atlantic skyrocket because of military risk, the cost of everything at Walmart goes up. We aren't just talking about stock prices, we are talking about the purchasing power of your paycheck. To understand where we are going, we have to look at 1956. The Suez Crisis. Back then, the United Kingdom and France tried to seize the Suez Canal from Egypt to secure their oil routes. They thought they could do it by force. Do you know what happened? The United States said no. President Eisenhower threatened to sell off the US reserves of the British pound, which would have destroyed the British economy. The UK was forced to withdraw in humiliation. It was the moment the world realized the British Empire was truly dead. Today, the roles are reversed. The US is the aggressor. We are the ones trying to seize the strategic asset. But who is the Eisenhower in this story? Who has the power to tell the US no? It's not a single country. It's the bond market. The bond vigilantes are the new superpower. If investors collectively decide that the US is unhinged, they sell the dollar and they sell treasuries. The resulting financial crisis forces the White House to back down. This is the scenario Bob Michel is hinting at. The market is trying to Eisenhower Donald Trump. The question is, will he listen? Or is he willing to burn the economy to get the map redrawn? Okay, enough geopolitics. Let's talk about your money. If this crisis drags on, or if it escalates, here is the playbook. 1. The danger zone, US multinationals and tech companies like Apple, Microsoft, and Nvidia. They are caught in the crossfire. If the EU sanctions US tech, or if supply chains fracture, these stocks take a massive haircut. They are priced for perfection and infinite growth. They are not priced for a NATO civil war. If you are heavy in the QQQ, you need to understand your downside risk is significantly higher than it was 48 hours ago. 2. The safe havens, usually, when stocks crash, you buy bonds. But if this is a crisis caused by US government overreach, US treasuries might not be the safety blanket they used to be. Look at gold. Gold loves geopolitical chaos. It loves the debasement of the dollar. Look at defense primes. It's cynical, but war or the threat of it is good for business. Lockheed Martin, Northrop Grumman, General Dynamics. These stocks often act as a hedge against geopolitical stupidity. 3. The energy sector. The Arctic isn't just about rare earths, it's about oil and gas rights. If tensions rise in the North Atlantic, energy transport becomes risky. Oil prices spike. Domestic US energy producers could see a windfall if global supply lines are threatened. For the currency play, the US dollar is spiking right now because of the flight to safety. Paradoxically, when the US causes the problem, people still buy dollars initially because it's the most liquid asset. But be careful. If the middle powers successfully coordinate a move away from the dollar, we could see a sudden, sharp devaluation. We need to address the elephant in the room. The thing no one on CNBC wants to say out loud. Denmark is a member of NATO. The United States is a member of NATO. NATO Article 5 states that an armed attack against one member is an attack against them all. It was designed to protect us from the Soviet Union. It was never designed to protect a member state from the United States. If the US military moves on Greenland against the wishes of the Danish government, strictly speaking, that is an act of war against a NATO ally. Does the UK declare war on the US? Of course not. That's absurd. But does NATO fracture? Yes. Does the EU impose the mother of all sanctions packages? Yes. Imagine a world where European capital is legally barred from US equity markets. Imagine a world where the SWIFT banking system is split in two. In this scenario, the S&P 500 doesn't just drop 10%. We are talking about a 1929-style event. A complete re-rating of global asset prices. This is the tail risk that options traders are paying a premium for right now. It's unlikely, sure. But the probability is no longer zero. And in finance, when the probability of a catastrophic event moves from 0% to 1%, you run for the exit. So, how does this end? Let's game theory this out. Scenario A, the grand bargain, the market panic works. Trump looks at the dropping Dow Jones and gets a call from the donors. He pivots. He invites the Danish PM to Mar-a-Lago. They cut a deal. The US doesn't buy Greenland, but gets exclusive, 99-year leases on the mining rights and expands the Thule Air Base. Trump declares he's secured the Arctic, the markets rally, and we buy the dip. Action, cash on the sidelines is king here. Wait for the pivot. Scenario B, the Cold War within the West. Trump doubles down. He imposes tariffs. The EU retaliates. We enter a prolonged period of stagflation. The middle powers slowly decouple from the US dollar. The stock market grinds sideways or down for 18 months. Volatility stays high. Action, value stocks, commodities, and real assets. Tech growth stocks get crushed by high interest rates. Scenario C, the kinetic event, a blockade. A skirmish. A miscalculation. A Danish patrol boat refuses to stand down for a US destroyer. Shots fired. Action, if this happens, all bets are off. Food, ammo, and gold. The Treasury Secretary says, don't militarize. The President says, you'll find out. The market says, we are terrified. Here is the bottom line for you, watching this right now. For the last 40 years, we have lived in a world where economics dictated politics. The pursuit of profit stopped countries from doing crazy things. We called it the golden straitjacket. You couldn't go to war because it would hurt your GDP. That era is over. We are now in a world where politics dictates economics. Ideology and national greatness are being prioritized over the efficiency of the supply chain. This means the buy and hold strategy of the S&P 500 is facing its biggest test in history. You cannot simply ignore the news cycle anymore. The headlines aren't just noise, they are the fundamental drivers of your net worth. My advice? Don't panic sell everything today. That's how you lock in losses. But do not be complacent. Review your leverage. If you are trading on margin, close it out. Review your exposure. Are you 100% in US stocks? Maybe it's time to look at some international diversification in markets that aren't trying to annex their neighbors, Japan, India, maybe even parts of South America. And keep some dry powder. Cash is an option on the future. And right now, the future is as foggy as a Greenland winter. The world is holding its breath. Wall Street is sending a message. Now we have to wait and see if the White House picks up the phone. Call to action, I want to hear from you in the comments. Is Trump bluffing to get a mining deal, or are we witnessing the end of the Western Alliance? And more importantly, how are you hedging against this? Gold? Bitcoin? Or canned beans? Let me know below. If you want to stay ahead of this crisis as it evolves hour by hour, make sure you subscribe and turn on notifications. The algorithm might suppress this kind of content, but you need to see it. Stay liquid. Stay safe. And I'll see you in the next one.